This is a jobs report that's always scrutinized. Every single month is. But how important is this given the overall rate narrative that we're seeing after a pause and then a raise by the Fed?
Well, given how much mixed data is coming into, this report will be very important. And the Fed will want to see wage growth continuing to ease, but the economy remaining resilient with good job gains across most industries. I think that is what people are hoping to see. And what is the likely outcome given other data rolling in?
What exactly is the expectation that we'll continue to see what some economists have called this kind of string of Goldilocks type reports, where we continue to see job growth still there, albeit modest compared to what it has been over the last year or so, with maybe some slower job in terms of wage gains, I guess is the best way to put it, Julia. Is there a scenario where this can continue, job growth with modest wage gains?
This is very much a possibility, and people are calling this an immaculate cooling in the labor market, where job openings fall, but the unemployment rate does not rise. And so a little bit of heat is taken off the economy. Businesses start finding it slightly easier to hire. They can become a bit more targeted. They can focus on quality again, but they're not under enormous pressure to keep raising wages or throwing signing bonuses out at workers.
And one of the big trends that we've seen over the last year with regard to where the job growth has been, a lot of it has been in hospitality and leisure. We saw some signs over the last couple of months that is still maybe there, but it's not growing nearly as much. Can you extrapolate anything about the consumer economy based upon what we are seeing in terms of hospitality and leisure hiring?
Well, we're very much going back to normal, where the main engine of growth is actually healthcare. The government is also punching above its weight and finally managing to recruit workers after having been blown out the water by the private sector for months and months. We're starting to see public schools do a better job of hiring. Last year, they started the year with many, many unfilled vacancies, and kids were pushed from one substitute teacher to the next. So they're trying to do a lot better this year. We're seeing wage growth for unionized workers, which was lagging behind, finally catch up. And so we're actually seeing job growth broaden and move out of just plain leisure and hospitality.
Okay. And before we let you go, Julia, I think the overarching question right now is, we thought a recession was coming over the last year. It hasn't arrived. Do you think that a recession is going to happen anytime soon?
Well, the Fed staff are no longer projecting a recession. Bank of America has pulled its recession projection off the table. Goldman Sachs has downgraded their recession forecast. There are many reasons to believe that there are tailwinds that could propel this economy forward, like declining inflation and rising real wage growth that is boosting consumer confidence. And of course, the stock market rally could also produce something of a wealth effect and has boosted CEO confidence in the outlook.